The next plan that I want to talk about is a whole life policy. With the whole life policy, the premium that we enter is going to be fixed for you for the duration of the plan. And in this particular case, it is going to run until 125 years old. So now under this plan, you can pay into it, and then it would obviously have the death benefit that we need. However, there's also two components that I want you to pay attention to, and that's the dividend payout as well as a cash surrender value. Dividend is paid to you from the profit of the company. It is not guaranteed. However, historically, we have been able to pay out a substantial amount over the duration, and it usually is pretty on target with the illustrations that we provide for our customers. Okay, under this particular plan, the dividends are paid into here, and you have three options. One is you can just take it in terms of cash, meaning that it can be mailed to you once a year, and you can take that money and spend it if you want. The dividend is not taxable up to the premium that you've paid into the plan. So that's another very attractive feature about that. On the other hand, you can also take that dividend and you can have it reduce the premium. So every year we will apply it into the policy so that way you can pay less if you want. So that's the second option that you can choose. The third option is to accumulate it. And when I say accumulate, what I mean is that you can just leave it in with our company, and as it accumulates in here, you actually will earn additional interest on that money that is sitting in there. Right now, we're paying 4%. Or if you wish, we can take that and then we will pay into the death benefit. With the death benefit, if you do it as what we call a paid up addition, it will buy additional life insurance for you. And even better is that when it buys that extra life policy, it is paid up, meaning that no matter what, that death benefit is going to be yours for life. All right, so that's dividend. Now that is different than actually our cash value. Cash value is premium that is paid back to you because you overpaid from the term cost, and so after they subtract the administrative fee, the mortality cost, maintaining the life policy, they put it into this cash surrender value. And what happens is you can see here in the beginning there's not much in it, but as time goes on, you start to accumulate a lot more. And if you ever need to access this money, you are able to do that in the term of borrowing it against your life policy. Again, the attractive part about that is that as it accumulates in here and you borrow against the policy, when you go to take that money out, it would look as if though you're borrowing the money from the company. Your money still continue to be in here and it continues to gain both interest and principal. Of course, if you never pay back the money that you've borrowed, when you pass, they will subtract what you've already borrowed plus any interest involved with that from the death benefit, and then your family would get the rest. And if you take a look at that, that still is a very attractive feature because you can see if you really pull out $298,000 at the age of 54, your death benefit's already $1.2 million here. And so if at some point down the road and you pass, you can see even if you subtract it from the death benefit, there's still plenty of money for your family to be able to pay for your funeral expenses, take care of everything that you're concerned about. The last piece that I wanted to mention to you is what's called premium offset. Again, premium offset is not guaranteed, but as you accumulated your cash value, and as time goes on, let's say that cash value starts to grow more and more and more and more. At some point, we can actually take that and then we can offset it against the premium that is being charged. And if you have gained so much that the interest earned is able to cover for the premium, you technically can stop paying, and then all the interest will be taken to pay for the death benefit, and you would have this plan instead of having to keep paying for it forever. All right? Any questions on this product?
No, it does sound appealing. I definitely want to accumulate, my money in this plan. So it's something that I'm thinking about right now.
Okay. All right. But there's one more I want you to look at before you make a decision.
Okay.